Closing beat, everybody. Happy, well, Thursday. Let me get this done here real quick. Welcome to our show. I hope you're having a great day out there. It's a quick stock market update show that we do. We call it Closing Beat, just to play off our sort of name, Jazz Wealth, out there. Hope you're enjoying your day. Very interesting day. We've got a lot to cover, of course, as we have all week, really. I actually just got off the phone, it kept me long, with another advisor who's playing golf. I'm like, what are you doing? How do you not have stuff to do today? Blows my mind. He plays golf all the time. It's crazy. Anyways, we've been here all day, actually, keeping track of everything, watching the markets. I just got to say, I love our customers. I've spent months in the dojo, and tonight, by the way, we'll do another class, geeky class in that one. But I've spent months kind of explaining, okay, when the markets fall, here's what happens. Getting your minds right, getting prepared for what the opportunity is, not just from opinion, but from stats, to actually show history, to show the good, the bad, the ugly, what happens if you panic, what happens if you sort of get to buy a dip and things like that. And I woke up today to just a slew of emails. I'm putting money in, man. Can you get me in? Can you get me in? And I love it, man. You guys have the right mindset out there, and it will pay off, of course. And a lot of you have seen this before. You went through this. This is not even half the pullback that we went through October, November, December of 2018. So really cool there. I love it. Anyways, I'll be doing a class later with our customers, a special update. We've got all the stats on the actual coronavirus. So we're going to go over all that. What's going on? What do you see in the headlines versus the actual stats that we have? And we'll cover, of course, the markets and everything that's going on in a more detailed way. Today, we're going to share, of course, what happened with the overall stock market. We're also playing a game. It's called Guess the Dow. I don't even know if we should play the game anymore. You're welcome to go take a shot. You go to jazzwealth.com/guess the Dow. Where do you think the Dow is going to close next week? If I could, I would pay more to the person that actually won. If you don't know, we're SEC registered financial advisors, fiduciaries. We are only allowed to give to customers $100, or we can give anybody really $100, but we can't exchange gifts of any more than $100. That's the rule. So if for some reason I could give more for someone that actually guesses where the Dow is going to close, I would, because that would be a piece of work right there. Hey, also your jazz artist of the week is Chris Bodie. Not that you're probably paying attention to this, but Chris Bodie, a great jazz trumpet player. He's got a song, the Live from Boston episode that he did. It was a DVD, I believe. There's a song called The Look of Love, and it has Cy Smith in there. Excellent singer. Great exchange between the trumpet and the singer there, how they just played back and forth on each other. I actually got to see that live in person where they did that, and holy cow, man. I mean, it's incredible, this woman's voice, and of course, Chris Bodie, so check that out. All right, here we go. Today, we got the Dow lower by 1,196 points, and even lower after hours. You've got the S&P down 137 points, a lot of selling at the end of the day, and the NASDAQ down, that's not a typo, 414 points lower on the NASDAQ. Your Russell 2000 was the outperformer. It beat the S&P in terms of holding up the most today. Still a very volatile day, and we know how extended that is. Yesterday I covered how extended it is and all that stuff. We'll cover that later. I've got the stats and everything for you guys in the Wine and Wealth class tonight, if you're one of our customers and joining us there. You got a wild, wild day here, but here's the cool part. You got more, you notice how I've been saying the last couple days, the sell-off has been consistent. It's been slow, steady, methodical, any word you want to use, like just to say, although it was a big down day all these last couple days, they've been really steady. Today you saw more of the panic, right? More of the washout, the people just throwing in the towel, the margin calls and things like that. So you really started to see that acceleration to the downside that you need to kind of mark a bottom. So it was really kind of a good sign today if you've been looking to buy this dip. I think we're in that range now where we're starting to find where we're going to settle in here. So we'll see what happens. We'll take a look at the Dow. Here's the Dow breaking through the uptrend there, drew the line there, just to show you as soon as we broke through, man, the volume kicked in, everybody threw in the towel there, just an incredible pullback there in the Dow. After hours, the S&P is actually down over 5% now, so we've sold off even more. So is the Dow, by the way. But we've broken through the 200-day moving average. We broke through that trend line there. You've got the governor of California saying 28 people have tested positive for the virus, and another 8,400 even somehow. People are being monitored because of their travel, where they came from and everything. If we look at the S&P 500, the last 6 days here, this is the fastest ever on record that we've fallen 10% or more. That's it. You guys are witnessing it. This is history right here. You get to be a part of it. This is the fastest ever in history. By the way, it's also the fastest that we've ever erased 4 months worth of gains, and counting, by the way. But really, really interesting. I thought I'd point out over in China, they actually finished the day positive and were up for the week at one point. So China actually getting a bid over there. I don't know why that is, to be honest with you, but just something that stuck out to me. If we go back and look at the S&P 500, we now have a drop of over 700 points in 7 days. Does that sound like a lot? 400 points in 7 days. See, that doesn't sound like a lot. So everybody's focused on the Dow. The Dow has fallen over 3,600 points in the last 14 days. In other words, from the highs to these lows here is just over 3,600 points. That's the headline. That's what everybody focuses on and we'll pay attention to. If we go to the Dow here, now down on the year by 9.7%. Just year to date, down 9.7%. After hours here, down 10% officially. We look at some of the leaders in the area. 3M had gained over 1% on the day. It finished up the day by about 3M. That's the people chasing those mask plays. By the way, I looked that up. 3M, their masks are, the M95 masks are put in their category of their healthcare business. Healthcare business also includes surgical drapes. It includes teeth whiteners. It includes a lot of tech and software in there, inhalers, stethoscopes, personal use items, which would be those masks, and invisible tooth braces. I didn't know they did that, to be honest with you. Skin cleansers, antiseptic foams, and the whole thing accounts for 18.4% of their total sales, at least as of what I was able to find there for you. So really, I don't know what we're chasing here, if you think that somehow that's going to play into effect. But otherwise, in the Dow, you also had Pfizer, which closed the day lower. That was one of your stronger stocks on the day. Look at that tail there, complete reversal there. And Merck hung in there until the very end of the day, and then it just started selling off, even after hours, selling a little bit as well. Weakness in Apple. You got Apple down 6.5%, now down over 17% from the highs, and Microsoft as well, which closed down 7%. Let's take a look, because I think that a lot of that happened here, last few minutes of the day. You got that acceleration. The last $4 of the day happened there right in basically the last 20 minutes of the day. So that's that accelerated selling that I'm talking about. That's the panic, right? When a market pulls back or a stock pulls back, there are normal pullbacks where people go, oh, cool, it's a pullback in the middle of an uptrend. And then there's panic pullbacks. You need that panic to wash everything out. You want to see the volume. Look at the chart. In the background there, you've got all this increased volume. That's not people saying, oh, well, this looks like a deal. That's people panicking. They're selling their shares at whatever cost possible, or the brokerage firms selling out positions from people on margin that aren't very good or comfortable using that. So in the Dow there, I just want to point out a couple names there that were weak. In the S&P 500, now down 7.8% on the year, a little better than the Dow. You had Clorox hitting new 52-week highs today. Everybody's out buying bleach and whatever. And what do you do with that? You put it on a sponge and wipe down your house or something. I don't know. Trying to get rid of all the cooties out there. But Clorox hitting new highs is one of them. You even had Win at one point, very strong on the day. It only finished up 1/3%. You saw a little bit of bounce in that area, which I thought was interesting. And Ralph Lauren was one of the stronger ones, although it did finish flat on the day. That one kind of stuck out. On the downside, in the S&P, you got Chipotle, not because of the virus here, but Bill Ackman. He runs a fund called Pershing Square, and he reduced his position. That filing came out last night that he was scaling back on that position. He had a big position on that one. You also had Realty Income. This is a REIT, so just showing you the mix. Like, you can't hide anywhere. Everything was just selling off today, which is a good thing, by the way, when everything is sort of getting pummeled. 8.6% to the downside. Also, they're doing a 9 million share offering at $77.40, I think the number was. So that's what Tesla should have done when they announced their offering there. It didn't work the same way for them, so we'll see. You've got Fluor Systems hitting new 52-week lows as well. They missed on earnings. They guided lower. They're considering selling Raymarine, that division, boats and GPS equipment and things like that. So that was one of the weaker ones on there. Let's take a look at your sectors here for the day. Well, here's the markets, by the way. Here's the decline from highs to today's close. So previously I used the lows. Today I use close because we're basically closed at lows. The S&P down 12.7% in terms of the SPY there from highs. The NASDAQ down 14, 13 on the Dow and 13 on the Russell. Officially got our 10%. I know a lot of you are waiting for that 10% pullback. This is officially the first time since December 2018 that we have pulled back 10% or more. We just did it in a few days. The average decline is 114 days. We just did it in a couple days, so much faster there in those terms. Let's look at the individual sectors here. I left them in the original order that we started with at the beginning of the week. So real estate was down the least at the beginning of the week, and technology was down the most. I had ordered them. If you look back the last couple days, you saw how we did that. What I did is I then left it just like that to show the change. Look at energy down 17%. You got materials and industrials lower as well. Financials, consumer discretionary. All in all, this area of the market, real estate, utilities, consumer staples, they got punched today. I mean, it was a good solid down move, but they're still hanging in there the best out of all of them. So what does this tell you? What am I sharing with you? Those of you that like to go buy areas, there's two types of investors. You like to buy discounts, severely discounted areas, out of favor areas, undervalued areas. And then there are those of you that like to buy relative strength, meaning stocks and sectors and markets that held up relative to the weakness elsewhere. So relative strength, in this case, would be real estate, utilities, consumer staples. Let's go over to a different couple areas here today. You got semiconductors still in the midst of an uptrend, although breaking at the moment. All in all, there's that black line there, still very much in an uptrend. But hanging on tight, right? So it did close below that trend at the moment. Back to that support area there, and that's what you have in terms of semiconductors. Tech stopped exactly on the uptrend. You're going to see this today. There's a couple different areas we'll point out where why did the sector stop right there? It stopped there because that was, like the S&P, that was a moment in time where people could say, all right, maybe that's a floor. They give it a chance to prove itself. If it doesn't prove itself, you see it kind of collapse from there. But tech stopping at the upper trend line there. Like I said, REITs got pummeled today, 5.5% to the downside. There you go. Just not pretty, pulling back from those highs. Everything getting hit. Now down over 9% from its highs. So if you like things that are close to the 10% area, well, there you go. You got consumer staples breaking through the 200-day moving average, and a huge volume there today. It was at the 200-day earlier today when I looked at it, and then just kept going and going and going, selling off there. Financials were hovering around the 200-day yesterday. Today, breaking through that, down 4% on the day. It's crazy. A crazy sell-off there in financials. They're back to being undervalued relative to most of the other sectors out there. So if you like the long-term fundamentals on your financials, there you go. Materials really got crushed today, by the way. They've been getting crushed overall. In the number of new lows today, there were 102 new 52-week lows in the S&P. The materials sector made up 25% of it. So that gives you an example how weak this area is overall. Just now down over 12% from highs to lows there. And you got the consumer discretionary now breaking officially the uptrend. So been in an uptrend there, officially breaking down and breaking below the 200-day moving average, closing at lows of the day. That makes you wonder, what happens if the market didn't close at 4 o'clock? What happens if the market's closed at 5 o'clock today or 6 o'clock, right? Just because the market's closed, you've got them stuck at the lows of the day. That's not a good sign. All right, if we go over to the 10-year here, that's a new record high, I should say, it's a new record low on the 10-year yield. Unbelievable, 1.28% on the downside there. Very low. A lot of people calling for the Fed to cut rates here. Obviously, there's now a 72% chance they cut rates. I don't think it's going to help, to be honest with you. But there's a lot of pressure on the Fed. And how funny is it? Those of you that are a little older, where are you at out there? Not everybody's a youngin', right? Those of you who are a little older, do you ever remember a time back in the 80s and 90s where the markets got a little weak and everybody went, hey, Fed, do something? That's brand new. That doesn't happen. Since the financial crisis, we've been sort of teased with the candy, if you will, where it's like, oh, something happens, give me some more candy. Come, give me some more candy, help fuel this thing. I don't know that a Fed cut's going to really do anything here in the short term. Does that make you feel better about the virus? I don't know what's going on there. All right, oil breaking to new lows as well. Now down over 30% from the highs. These would be the highs over here you'd be looking at. Down over 30%. This is interesting. This is really getting interesting in oil because you have a lot of oil companies that are spending money on production. I'll bet you that changes. I'll bet you a lot of these oil companies, ExxonMobil, Chevron, things like that, I'll bet you they come out and say, we were going to spend so many billions, and now we're not going to spend as much because it's not worth it. If oil stays down here at these low prices, it's just not worth it for them to produce. A lot of these companies, if you look at oil companies, oil production companies, they have $49 or $50 a barrel break-evens in terms of what they need the price of oil to be to go out and produce it and all the manpower that they put into it. So what do you think they do next? Anybody know about this one? We're very familiar with it because we manage our own funds here, and the dividend fund is one of them that we mentioned, which has a lot of oil stocks in it. So let's think about this. If you don't find it worth it to pay money to make more oil, to go drill for it and get it all ready, and you're not going to make any money there, but you can't stop drilling for oil. That's your business. That's what you do. Where do you think you save money then? What do you cut back on that helps you continue to do business, right? I'll give you a hint. It's the dividend, right? This is where these oil companies, you got to watch them because this is where they could start to say, we're going to cut our dividend, right? We have to do something because we're expecting $50 a barrel and we could pay a dividend at $50 a barrel. Now, all of a sudden, we're using that cash to go produce. We got to do what we got to do. We got to pay our bills and everything. And we need the cash. Therefore, we don't have enough cash per share to pay out dividends. Look for ExxonMobil, look for Occidental Petroleum, Chevron. Look for all of them. Those are guys that have break-evens around $49 or $50 a barrel. You're going to look to see that they're probably going to start tweaking with their dividend there. So be very careful if you're looking in this space at the moment. But nonetheless, you got OPEC meeting next week. They're going to cut. They're going to cut production. It's just a matter of how much and whether they get Russia involved as well. But they're going to cut production. It better be at least by 600,000 to 700,000 barrels. Because that's how much they're already not shipping to China. So I think they know that. I'm not like telling them how to do their job, but I'm pretty sure they know that. All right, so we'll see what happens next week. Expect more volatility in the price of oil. All right, couple stocks. Zoom taking off another 30% today. It was up 20% the other day. They're just adding more and more subscribers. I told you yesterday they added more subscribers already this year than they did all of last year because people are working from home and planning on working from home. You had Facebook cancel their whole developer conference that they were going to have. Very interesting. Best Buy. Best Buy reported earnings today, beat on earnings by 23 cents. They did lower their guidance going forward, and they said, you know what? We don't know exactly how this virus is going to affect us. You saw that today from a lot of different companies that gave up. You had an analyst from BNY Mellon who said, you know what? You can't model this anymore. We're not even going to try. So you have companies out there. Marriott was another one that came out and said, we actually have no idea. We'd be taking a random guess if we told you how much this was going to hurt us at this point. It's not a good sign, right? When they can't even do that. All right, you had Booking Holdings hitting new 52-week lows as well. They said travel demand definitely impacted. They reported earnings. They did beat on earnings. That's for the previous quarter, though. Remember that. Down 1% on the day. They said travel demand is severely impacting us and that they lowered their guidance going forward. So speaking of Marriott, by the way, there's Marriott down about 0.5% on the day. Their exact words were, we cannot fully estimate the financial impact of the virus. We're not even going to try, right? They're throwing in the towel. Right? Very interesting. Square was quite a bit higher on the day, only gained about 3% to end the day. They beat on earnings by 2 cents. They did lower guidance a little bit, but overall, they had a strong increase in their overall user base, number of people using it. So it got a little bit of help today. It was like a defensive, weird way to say that, but a defensive play today. Etsy a little bit higher as well, 14% on the day. They are predicting revenue growth in 2020 between 27 and 30%. So they obviously a well-deserved pop there on the day. You got Tesla down by, let's call it $100, $99.80 on the day. That is officially, if it stays right in here, it will be their worst week ever. And that's, obviously percentage-wise. But so far on pace to be their worst week ever. And then after hours, what do we have here? Bed Bath & Beyond down 3% on the day, but after hours they're saying they're cutting their workforce by 10% to help them with their restructuring plan. Remember, they're spending $600 million to buy back shares. They're spending an additional $600 million. They're spending $400 million to revamp their stores, give you less choices, and hopefully you'll realize that they're not too expensive. And so that's what you have there after hours with Bed Bath & Beyond. Is it lower? Bed Bath & Beyond, I believe it's a little bit lower after hours there, but that's what you have there. You have 10% of the S&P above the 50-day moving average. Only 10%. That's only 52 stocks as of a half hour before the market closed. It could be a little bit less by now. The stocks that are the furthest from their 50-day, meaning to the upside, let's show you an example. So, Legg Mason's getting bought out. That's not fair. Look at a stock like Regeneron. So what I'm pointing out here are the stocks that are the furthest above their 50-day, which is the blue line for me. So you got Regeneron Pharmaceuticals, of course. You got Norton LifeLock there, still trading above the 50-day moving average. Limited Brands, believe it or not, open there. It opened at the 50-day, but closed above that. Good little bounce for them off the 200-day as well. And Netflix, there you go, above the 50-day. And Clorox, which I mentioned a minute ago, hitting new 52-week highs. Those are some of the names that are still well above their 50-day. Those that are on the downside, meaning they're the closest to the 50-day and flirting with breaking, and some of these may have already broken. So Kroger. So that's 51 stocks, because Kroger did close below the 50-day moving average. So that one going to be taken off the list probably tomorrow. Dollar General, see how close it is to the 50-day? So it's not like we have a lot of stocks just floating way up here, hanging out. There's only 51 stocks as of this list here, and a lot of these are kind of flirting with breaking. So that's, you can see McKesson, we're down to 50 stocks already. So 7% lower, McKesson breaking through the 50-day there as well. And Lennar Homes, technically closing below the 50. That's 49. I'd venture to guess that we're closer to 40 names in the S&P 500 that are still above their 50-day moving average. You only had 4 new highs today. CME Group was one of them, although it did finish down on the day. Naturally, people believing they're going to benefit from all these transactions. Gilead Sciences, remember the World Health Organization said we're focused on you guys for one of your more promising drugs to help prevent this coronavirus. You had 102 new 52-week lows. Like I said, 1/4 of all of the 52-week lows today came in the basic materials space. ConocoPhillips losing 7% on the day. Hess, a lot of these are going to be oil names, down 1% on the day, new lows. Mosaic, not in the oil space, but hitting new lows after flirting with it for quite a while, down 5% on the day. Occidental Petroleum, of course, we could go through a whole bunch of these that are near their 52-week lows. And again, I'll point out the oil stocks. Be very careful here. Keep an eye on those dividends. You think you're getting this higher yield now. If they start cutting those dividends, if the price of oil stays below 50, that has to be a consideration. That has to be a consideration for you to want to maybe make an adjustment there. Be very, very careful with that. You now got a 72% chance of a rate cut in March. We'll see what happens. I don't think. I think like I said yesterday, I think the Fed's going to use their words. I don't think they're going to just voluntarily cut. I don't see it, but I guess we'll see. Okay, what else do we have for you here? Tomorrow, Friday, we've only got earnings from Foot Locker, Sohu, Chinese company, and Wayfair, which is expected to lose $2.62 a share. And they're flirting at new lows there, $1.12. They're too expensive. Dividends coming out. Goldman Sachs paying $1.25, and that is it. That's all you get. I'll take a chance here and try to answer some of your questions, and we'll go from there. Did I share everything I wanted to share with you today? Yeah, I got a lot more tonight for the closing, our Wine and Wealth show. So grab a much-needed glass of wine. Come join me tonight, and we'll go over some of the more geeky stuff for our customers here and help you guys out with that. So we'll see. There you go. Yeah, I don't think at least in March, I don't think the Fed has anything they need to do. Think about what's going on here. It's a 12% pullback from record highs. It's not like we were flat for a while, had a couple years of underperformance, and then fell. You know, everything else is still strong. It's just this temporary panic. It's really fascinating, in my opinion. The Dow drop during the first week of the financial crisis. I don't know that one. During the first week, what's the biggest drop? That's an interesting one to cover. How fast do we fall? Not this fast, because this is the fastest we've ever fallen. So that's a good question, though. Yep. Don't jump out the window just yet. I don't jump out windows. I love this pullback here. That was, like I said, that was the most fascinating thing today, is to wake up to customers like panicking. Like, can I get the money in? I put a deposit in. Hurry up and go. I'm like, okay, let's do it. Today, Craig's asking, is this more computer algorithms or people selling their positions? You're going to have a lot of rebalancing in there as well. But yeah, you got algorithms in there. I mean, no doubt about it. There's a large portion of the market that's traded purely just by machines these days, right? They know the fair value. They adjust along the way and everything. But I think a lot of it is panic. I mean, to be honest with you, because this is the first time we saw that. The last couple of days, go back and watch the last couple of days worth of shows, and it was like a clean and clear pullback that just happened to be a lot Today, more panic throughout the day. And we had a rather sizable bounce throughout the day. I believe it was like 600 points from the lows in the Dow. So, yeah, I mean, that's impressive. What catalyst can stop the selling? I think just being oversold here in the short term is really all it's taking. You've got a point where people are, you even saw it on Bloomberg and CNBC today, where people were saying, I don't get it. I'm putting money to work, right? Even Jim Cramer, who was saying he's stocking up his war chest at home with the masks and the water and his vitamin C and all the different penicillins and all that stuff. Even he was saying, I'm still going to put a little money to work. So I think you're seeing that. People realizing this is a very, very short-term overreaction. And I know for a lot of you, this is what you've been waiting for, to put a little money to work. The tough part, by the way, the real tough part here is tomorrow's Friday. How many people do you think aggressively buy the market tomorrow? I mean, you may dip your toe a little bit, but how many funds do you think decide tomorrow's the bottom and put all kinds of money to work over a weekend? I think that's a tough one. I think it's a tough one. You're not taking money out times like this. You buy the dip. Yeah, there you go. I hear you. This is not fun. You're almost all in cash. You want to dive back in and get long again. Hopefully you didn't sell on the way down, right? That's always going to be something you regret. Look at any other point in history. I'm going to share a chart tonight with customers to show. No, I don't have it. With the other viruses. The H1N1 and the SARS, right? What did the markets do? And I'm actually going to show how that is this little blip on the screen. In the long term, it's this little blip on the screen that you can't even really see, right? So anytime you see this kind of short-term panic, when everything else is good, when the economy is strong and everybody's got jobs, we may all not go to, fly to Europe or China or wherever we're going, or South Korea especially. But, all in general, we're doing our thing, right? So it's going to be a rather interesting couple quarters here. I kind of agree that the weekend is not going to be filled with happy news that makes you feel like you want to buy the stock market. So that makes you think, like, why would you put a significant amount of money to work tomorrow? You might just do a little bit and then sit back and say, well, let's see what happens here. But very interesting. Yep. I love it. A lot of people got some cash. They love it. They want these pullbacks here. I love it. All right. Well, I think that's pretty good for the day. Rather action-packed day. And again, the markets are lower here after hours. NASDAQ's down now over 500 points after hours. The Dow is down 1,379 points, Dow futures, which are closed at the moment. But S&P down 161. So adding a little bit to the decline there. I love it. All right, well, I'll wrap it up there. I appreciate you guys sticking around, hanging out with me today. I will chat with you again tomorrow. We'll do this all over again, and let's see what happens. Keep the excitement going, expect more volatility, and I'll be here to cover it.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.